Okay, the next page that we have here is the Uniform System of Accounts for the Restaurant Industry. And again, this is the newest USARI, the USARI for the restaurant industry. And there are a couple of changes from the previous USARI. The big change is that there is a line item that actually tells you what prime cost is. And so remember that in our previous page, we had said that prime cost was made up of the cost of goods sold and labor. Okay, and actually, if you turn, well, okay, actually, hold up. So prime cost right there, okay, and you kind of go down the same buckets that we discussed from the previous page. You have other controllable expenses. So these up here are totally controllable by management on a day-to-day basis. Here, still controllable by management on a day-to-day basis. You have a subtotal line of total other controllable expenses. Controllable income, this is a line item that we generally don't see on non-internal financial statements. You'll only see this on internal financial statements, and even still, it's not really all that popular yet. Okay. Then, outside of the controllable expenses, we have non-controllable expenses. So again, management on a day-to-day basis does not have control over its occupancy costs or its leases or on depreciation and amortization. There's a subtotal line for the non-controllable expenses. And then we have restaurant operating income. This is kind of like the NOI line, the net operating income, because all this stuff is operating. And then down here, we get down into non-operating expenses. Okay, so you have the corporate overhead, interest expense, anything other that's non-operations related, and then this just happens to stop at income before income taxes. So this is also considered EBT, earnings before taxes. Okay, now you'll notice that I'm going to try to get everything into the frame. It's not going to happen. Okay, so I'm going to eclipse sales, and I'm just going to, so you guys can start off with the cost of sales side and hopefully end with the, I don't know if you guys can see that, okay, to the NOI side here. But if I could fit it all into the frame, notice that if you go back to the previous page, and maybe I'll just zoom out for you guys a little bit. If you go back to the previous page, and turn it so that, you know, it's bottom side, the bottom margin is facing up, you'll notice that the order in which these costs go in is exactly the same order that it's being presented on the USARI, right? So we start off with cost of goods sold, labor, and the different aspects of labor, subparts of labor, which really make up our prime cost. When we go a little bit lower, so, you know, just to double check, right? So here, we start off with cost of goods sold, and then we move on to the various buckets of labor, and that gets us to the total line for prime cost, right? So still following me? And then the next grouping is of other controllable expenses. So if we go back to here, that's turned over, right? Cost of goods sold, labor, the various components of labor, that makes up prime costs. And then we go to other controllable costs, which are these buckets here, right? And that gets us to a summary line of controllable expenses, right? Of controllable expenses here. And then our next group should be of non-controllable expenses, So you see here that our next group is non-controllable expenses, okay? And then we have the one-time stuff, the non-reoccurring stuff, but now we get into the non-operating expenses. So the one-time weird stuff, and then we get to the financing decision stuff and the tax-related stuff on the bottom, which is kind of what we have here, right? The non-controllable stuff, this doesn't show the one-time non-recurring stuff, but then it moves on to the interest and the other, and then the taxes will come below the income before income tax line. Okay, the next thing that I want you to notice on the USARI is that you have one column that's associated with just dollar amounts, the actual dollar amounts, and then the next column over is a percentage base. This percentage-based income statement is also called a common sized income statement because it puts all these line items in a common size as a percentage of total sales. Okay, so these percentages are all of total sales. So total sales is 100% of total sales. Food sales as a percentage of total sales. So here, 77.8% of its total sales are food sales, right? 19.4% of total sales comes from beverages. 2.8% of total sales comes from merchandise and other. Okay, so all these other line items down here are as a percentage of total sales. So here I can read this as direct operating expenses are 6.1% of total sales. General administrative expenses are 5% of total sales. Total other controllable expenses, 19.8% of total sales. Okay, the only exception to like the common sized being a percentage of total sales are for the kind of line item departmental expenses. These cost of goods sold percentages are a percentage of their respective sales lines. Okay, so the food expense, right, is 30% of food sales. The beverage expense of 28.6% is 28.6% of beverage sales. So if you do the math, right, 210 over 700, that's this line here and this line here, will get you 30%. Okay, so that's these line items here are a percentage of their respective sales line. It is not a percentage of total sales. Okay, so just these line items. Everything else on the common sized is as a percentage of total sales. Okay, and that's the uniform system of accounts for the restaurant industry. Okay, so the next page that we have is the summary operating statement for USALI, for the lodging industry. Okay, so this is what hotels generally go by. And I hope you guys can see this clearly. Okay, so kind of like the uniform system accounts for the restaurant industry, you'll have a column with the actual number, and then you'll have another column for the common sized. The common sized for the USALI, kind of the same idea as for the uniform system accounts for the restaurant industry. Everything is as a percentage of total revenue, this total sales line here, except for the departmental expenses. The departmental expenses here, right, these guys are as a percentage of their respective sales lines. Okay, so that rooms expense percentage goes with room sales, room revenue. Okay, F&B expense percentage will go with F&B revenue. Oops, and I'm running out of marker colors. So, and the other will go with other. These two would go with each other. Okay, all the other line items, the common size, everybody else, the common size will be as a percentage of this total revenue line. Okay, but departmental expenses are as a percentage of their departmental revenues. Okay, and going down, again, we start off with the revenue side. We start off with the cost of goods sold. Here it's departmental expenses. It's the expenses that are most closely related to generating these revenues. Okay, then you kind of come up with total departmental income. Some places actually break it down by each department as well. That's fine. Okay, think of this as kind of gross margin, as like a gross margin equivalent on the USARI. Undistributed operating expenses, that kind of means just like the like in the USARI, it's comparable to you saying that it's other controllable costs. Okay, so general and administrative, sales and marketing, okay, there. So think of it as the other controllable cost side, but still operating. Okay, so that's still operating. Gross operating profit, you'll see this as GOP. This is kind of close to NOI. This is a number that a lot of companies like to see for hotels, the gross operating profit side. Okay, because this tells you, this gives you some insight into that businesses, that management companies' ability to make money selling rooms on that property. Okay, so it's gross operating profit. Management fees, so this is for a hotel that maybe pays a management company to manage the property and to actually sell the rooms. So if I own the hotel and I pay for, say, pay for Morgans to come and run the operations of my hotel, I would be paying the management fees, and that would be here. Okay. Income before fixed charges, so that's kind of a subtotal line. That's the GOP minus management fees, and then you have a bunch of fixed charges. So this is like the uncontrollable costs, right? Rent, property tax, insurance. This should sound like triple net for you guys right now. Okay, so no matter how well I sell my rooms, I still have to pay these. That's why it's considered a fixed charge. So it's a non-controllable charge right there. And then hotels then also have their own NOI line. Okay, less replacement reserves. A lot of hotels, their contracts, the owners tell the hotel that you have to set aside a reserve to replace or do some construction in the future, right? So it's kind of like you're saving for a rainy day. It's kind of required under contract that you set a little bit of money aside for future improvements that you're going to be making to the property. Okay, so since this is kind of discretionary, because, you know, I guess you can kind of become like a slumlord and not really repair anything or not make a major renovation in the future. But yeah, so it's kind of discretionary, but a lot of times people like to stop at this line to see NOI, net operating income, for the hotel.